Good morning, everyone. Good morning, guys. How are we doing? Good to see everyone. We do this every Monday. For those of you that will be watching this video, by the time we are done with this class, I come on here live to teach Forex every Monday morning, every Saturday, and every Thursday. Okay, so consider subscribing to this channel so don't miss out of any of our amazing classes going forward. Okay, so that said, we just have to wait for 5 minutes, just 5 minutes so that we can get more people to join us. Let's go, guys. Let's go. So good to see everyone. Today, I want to touch on a subject that I get asked questions, many times, and that's on Fibonacci, how to use Fibonacci for trading. So I'm hopeful that this is a topic that will really, really help you guys a lot. Okay, so it won't take much time. In less than 30 minutes, we should be done with today's class. So um, while we wait for more people to join, please do well to give this video a thumbs up and also share the link. Share the link, copy the link, share to as many people as possible that would love to be here. Let's all learn Forex together, guys. Okay. So do well to share the link. Make sure you're sharing the link, guys. Let's get more people to join the live session so that we can kick off. I'm very excited about this week because I shared some amazing opportunities with you guys yesterday. If you didn't see the opportunity I shared with you guys yesterday, sorry, man, you're missing out a lot. Okay. All right, so good to see everyone. Once you join us, let's know your name and where you're joining us from, and let me know if you guys can hear me. If you can hear me loud and clear, please let me know you can hear me because my microphone has been misbehaving a little bit lately. So if you can hear me, let me know you can hear me. Please let me know you can hear me. Good morning, David BME. How was the weekend? Yes, my weekend was awesome. Was really amazing, really, really amazing. Good to know. Sunday Shola, good morning. Good to see you. Jeremiah Odechuku, good morning. Good morning. Good to see you. Good to see you. Please, once you join us, let's get your name and where you're joining us from. Let's know your name and where you are joining us from. Okay. Good morning, Kingsley Chukwudi. Good to see you. Latifa Aziz. Good morning. Good morning. Good morning. Good to see everyone. I'm really excited to see you guys again. I'm always excited every morning that we have to do, every Monday morning we have to do these live sessions because it gives you an opportunity to be a part of your growth process, be a part of your success in Forex trading, financial freedom. So I'm really excited. It gives me a lot of joy, especially when you guys share testimonies with me on my DM and all of that. It gets me really excited, and I'm happy that we are doing this together. Okay, so today I'll be talking about Fibonacci. I'll be going straight into the teaching in the next 1 minute. 1 minute, I will start teaching ASAP. So if you know anybody that should be part of this call, that should be part of this class, let them know that we started. Okay. Let them know that we have started and we are live. Okay. Nicoline Chang, good to see you. Good to see you. Nicoline joined our Cash Club mentorship program yesterday. Congratulations. Chibuke, congratulations to you too. Okay. All right. So I think we're good to go. We're good to go. We're good to go. So let me quickly share my screen so I can be able to show you guys some things, write some things down before we get going. So like I said, today's class won't take that much time. I'm hopeful it won't take that much time because things I want to teach today, they are not that hard to learn. They are not that hard at all. and it shouldn't take you much time to actually understand it. Okay, now we're going to be talking about Fibonacci. Now you need to understand this very important stuff about Forex, which is the fact that in Forex trading, there are tools for analysis. There are tools that you use for analysis, or tools that you can actually use for analysis. And there's a mistake that I used to do before, which I want to quickly give you the correct, just interpret it correctly for you. Now, there are tools in Forex, and indicators are examples of tools in trading, but not all tools are indicators. Let me say that again. God, my screen, my mouse is not typing. What's happening here? What is happening here? Just a minute, guys. Let me try. Okay, good. So this is a very quick stuff I want to do, take out of the way. Tools are indicators, are tools for Forex analysis, but not all tools are indicators. Okay. Now, at some point in my trading career, I used to assume that every single thing that you can put on the chart, aside from the regular support and resistance, that you draw on the chart, that everything is an indicator. But the truth is, not all tools are indicators. All indicators are tools, but not all tools are indicators. Okay. For instance, examples of indicators. Examples of indicators are, for instance, fractals. If you've not heard of fractals, you need to. Fractals, these are indicators. Another popular indicator that a lot of people use out there, moving average. Moving average is an indicator. Average is an indicator. Another indicator is the alligator. Is an indicator. Another indicator, you guys can mention some on the comment section. If you know any indicator on the comment section, go ahead and mention it comment section. Anyone you know. We have Donchan channel. We have Ichimoku. These are all indicators, right? Which other one again? There's this other one that looks much like Donchan channel. I can't remember the name of that one again. I can't remember the name of that one again. Somebody's mentioning MACD. Which other one do you guys know? Which other indicators do you guys know? MACD. What else? RSI, stochastic. These are all indicators. Okay. Now, examples of tools. Examples of tools include, but not limited to, the following. Trend line. Trend line is not an indicator. Trend line is a tool. Okay. What else? Which other one do you guys know? Okay, you guys are getting Bollinger Bands. That's the one I was thinking about. Yeah, Bollinger Bands is an indicator. Yeah. So example of tools is trend line. Which other one? Let's mention tools now. Let's talk about tools. Which tools do you know about in Forex trading? Fibonacci. Fibonacci is a tool, which is the one we're talking about today. Which other tool do you guys know? Which other tool do you guys know? Which other tool do you guys know in Forex? Eclipse is a tool. Everyone's mentioning fib. Is it only fib you guys know? Who else knows another two? Volume profile, rectangle, yeah. Which other one? I've already mentioned trend line. Which other one do you guys know? Short and long. Somebody's now mentioning mock-ups. Okay, so everything you're seeing on the chart right now, these are all tools: horizontal line, horizontal ray, vertical line, cross line. These are all tools. Okay. Now the difference between, let me now tell you, the major difference between indicators and tools is that indicators are more subjective than objective. Indicators are very, very subjective. When you put a fractal on the chart, it shows you the value of, it shows you the possible, support and resistance places on the chart. When you put a moving average, it shows you the it plots a graph of the average trend of on that particular chart. It's subjective. You can't change it. It is what it is. Okay. For indicators, it is what it is. You can't do anything about it. Okay. But the difference with two is that tools are more objective. You can make a trend line say what you want it to say. For instance, let's say we want to use a trend line on, for example, on this chart right now. Let me see whether I can see something on a daily time frame. Let me see whether I can see something on the daily time frame. So for instance, I know traders that if you want to draw a trend line on, let's say, this daily time frame, they can draw the trend line like this, putting attention on the weeks, just the weeks, and this is what their trend line will probably look like. I know some people also, their trend line will probably look like this, taking account to the bodies of the candles instead. So tools are very, very objective. Okay, depends on who the user is and what the user wants to see on the chart. So that's the major difference between a trading an analysis tool and an indicator. Indicators shows you what it is. The values are preset. You can't change it. Once you put in the parameters on that particular indicator, it shows you what it should show you. You can't change it, you can't adjust it. But for a tool, it is much more objective. Okay, you can make it say what you actually want to see. Now, the reason why I took out time to actually make this difference and explain this for you guys is because I see a lot of people making the mistake of using tools, example Fibonacci, the very wrong way. Okay, they make a lot of mistakes in using Fibonacci because of its objectivity, its ability to show you what you actually want to see. So you see people using Fibonacci very terribly. Okay, instead of using as a tool that will make them money, they're actually losing money using Fibonacci. So my desire today, what I hope to achieve today, is to teach you how to use Fibonacci the correct way, the best way to use Fibonacci, and you can, as much as possible, tweak it to actually fit your trading plan and your trading style. Okay, so going forward, let's go ahead. Let me tell you what, let me share my screen again and let's talk about Fibonacci. Okay, you can take a screenshot of this if you want to. You can take a screenshot of this if you probably want to have it, so that I can go ahead and wipe. So let's go. Let me do it this way. Let's talk about 3 popular mistakes people make using Fibonacci. Okay, so these are 3 popular mistakes that a lot of people make while they are using Fibonacci, which I'm hopeful that after this lesson you will stop making these mistakes and actually know how to use them correctly. Okay, so Fibonacci tool, for those of you, for the sake of explaining what a Fibonacci tool is, it is a tool that helps you to follow trend. Okay, that brings us to the very first mistake that people make in using Fibonacci. Okay, this is the very first mistake that people make. I'll put it this way: lack of understanding of usage. Okay, Number one mistake people make when using Fibonacci is that they don't even know what to use it for. They don't know what a Fibonacci tool should be used for. They use a Fibonacci to do practically everything, okay, which is a very, very large mistake on its own. Let me explain what I mean by that. Okay, now look at this. I know people that use Fibonacci practically based for like everything. They use Fibonacci for every single thing. When the market is moving up, they're using Fibonacci. When it's moving down, they're using Fibonacci. For instance, now look at this. Somebody can easily come right here, and let's say this market. Let me go 15 minutes now. Let me see whether I'll see something I'm looking for. Somebody can do something like this now on a 15 minutes time frame. They want to say, okay, I want to use a Fibonacci on this. They do something like this. Something like this. Let's say when the market was, let's do this level here. Good. Let me go forward a bit. Good. You see them come and do something like this. Okay. And let me even pose it as a question. Before we go on, let me ask you a question. Do you think there's anything wrong with this Fibonacci? Let me see whether somebody already knows, at least somebody has an insight about what I want to explain now with this. If you think this is correct, type correct on the chart. If you think this is incorrect, type incorrect on the chart. If you think this is correct, this is a correct way to put a Fibonacci, right? Correct on the chart. If you think there is something wrong with this, type incorrect. I'm waiting for you guys on the comment section, guys. Type. Let me see. If you think everything is fine, this is a good way to use the Fibonacci. Type correct on the chart. If you think it is incorrect, type incorrect. Okay, I can see two people typing incorrect. Okay, who else? Don't be afraid. It's okay to fail, man. It's okay to fail. If please feel free. Even if you don't answer it correctly, it doesn't mean that you're a bad trader. Okay, incorrect. This is what typing incorrect can be wrong. So don't allow them to mute your voice. Okay, so if you think there is nothing wrong with that method, please type on the chat. Okay. Only 3 people so far have typed incorrect. Okay. Okay, someone is saying the drawing of the Fibonacci is correct but incorrect because the market structure is uptrend. Okay, so this person, please the Angel FX, has an insight about what I want to explain. Okay, now Fibonacci is a tool practically used for following the trend. Let me write it here. Fibonacci is used for following the trend. Simple and short. The only use of Fibonacci is to follow the trend. We use Fibonacci to follow the trend. What that simply means is that a Fibonacci is only valid when it is drawn to follow a trend. As you can see simply, the trend on this market is an uptrend. It has been giving higher highs and higher lows. Higher highs, higher lows. Higher highs and higher lows. So that simply tells you that any Fibonacci that you're going to be drawing on this chart should be such that will tell you where the market will likely retrace to and give you a pull back to, and where the market will continue trending from. So on you, the right way to use the Fibonacci on this is I'm coming, guys. So the right way to use the Fibonacci on this is to draw from this level here, swing up, find where the market will retrace. When the market is something gives you a little pullback for in this case now, this red candle, this is where you put out Fibonacci. You draw from the last swing low to the swing high. which gives you where the market will likely bounce from. Should be 0. Good. So it shows you where the market will likely reverse from. Now, there are different levels on the Fibonacci tool, which people use different levels for. Okay, some people use I think I've seen 18.3. I've seen people use I think 40 something percent, but people just have different levels they use for Fibonacci. But personally, I use these 5 levels. Okay, the 0%, 23.6, 38.2%, 50% level, 61.8% level. What these levels are possible areas of retracement. Now you can go and read about what Fibonacci is generally. Okay, by definition, if I go into definition, it might just be a bit bulky for some of you to understand, but just know that it is used to know possible retracement zones. For instance, the market moves like this. Let me show you how the market moves. I just hope I don't spoil this. Okay, I think I've already spoiled it, but it's fine. Now, the market, when a trend is moving, this is a typical trend movement, right? This is what a typical trend movement is. So if Fibonacci 2 is used to measure at what level will this market possibly, from here to here, what is the possible levels that this market can retrace and start going up again? That's typically what a Fibonacci tool is used for. So in this case, where we have something like this and the market goes up, to now determine whether because this market can reverse from here, or it can reverse from here up, or it can even reverse all the way down to here before going up. So what the Fibonacci tool does is to help you to predict at what level will this market reverse to before going up. So that's just the simple basic use of Fibonacci tool. Okay, so you don't put a Fibonacci tool just everywhere on the chart. You put it at possible levels where you're looking for the market to continue pushing all the way up. In this case right now, as you can see, the market dropped to the 61.8 level. Fibonacci tool was like, it works like magic sometimes. Okay, as you can see, this market dropped to the 61.8% level, touched it, and immediately started going, started shooting up. You understand? So typically, that's what a Fibonacci tool is used for. Nothing more, nothing less. Okay, you just use it to determine where a trend reversal is, possibly going to happen, and where retracement is going to end and where pullbacks are going to end. Okay, and for a market correction to actually continue following the trend. Okay, does that make sense? If it makes sense, let me know in the chat. Let me know that you've grabbed that. So we'll move on to the next point. Okay, like I said, I don't hope this training will it won't take that much time, because it won't take that much time. Yeah, so let's go ahead to number 2 mistake people make when using Fibonacci. So number two mistake people make when they are using Fibonacci is using or let me put it this way, misuse of time frame of application. Okay, now what this simply means is that when you're using a Fibonacci tool, like I've taught you guys many times, you should have multiple time frames for multiple reasons. One can be an execution time frame, one can be your analysis time frame, one can be your bias time frame. Okay, that's how I teach my students. So most of the time, the first thing you need to know is at what point, okay, at what time frame, on what time frame should I apply a Fibonacci tool? Not every time frame, it's not every time frame that I should use a Fibonacci tool for. For instance, the way I do my top-down analysis, the way I approach the market, I first start my analysis on a daily time frame. on a daily time frame. I try to get my buyers on a daily time frame or from a weekly time frame if I want to enter a swing trade. I find my buyers on a daily time frame, and then I scale down to a 4 hour or a 1 hour time frame to execute my trade. Okay, now it will be very, very, very unwise for me to be applying a Fibonacci on a daily time frame, because what I use a daily time frame basically is just to find a bias. It is not my execution time frame. I don't use a daily time frame to put my stop loss and my take profit. I do all of that based on either a 4 hour time frame or a 1 hour time frame. You understand? So what I use where I use a Fibonacci time frame is on a lower time frame, either on 4 hours or 1 hour or even a 15-minute time frame, because that's where I mostly execute my trade. So the mistake that people do most of the time is that they use Fibonacci anywhere. They can apply it on a 4 hours today, 1 hour today, 15 minutes tomorrow, daily time frame tomorrow, weekly time frame the following week. Okay, that's a lot of that. What that does is that it varies your results as a forex trader. The more trades that you're taking, the more experience in application of your strategy that you should have. So you have something that is constant. So anytime you keep varying your parameters, varying your use of indicators, varying your use of tools, giving yourself different results over time, what it does is that it depletes your mastery of your strategy. Okay, it depletes your mastery. You won't know what actually works. You won't be able to tell what works after taking, like, let's say 100 or 200 trades in a row. Okay, so that's why it's very necessary to be consistent with the time frame of application that you're putting your Fibonacci. Okay, that's the second thing. Okay, hope you guys are getting value. I really want to do this very quick and run along. Okay, have a consistent time frame of use for Fibonacci. Okay, number three. So number three, this is number three, the third and final mistake people make when they are using Fibonacci is wrong application, or let me say wrong drawing of Fibonacci. Okay, now let me tell you why and how people make these mistakes a lot of time. Now, Fibonacci is drawn from either swing high to swing low, or from swing low to swing high, depending on oh my god, sorry about that, man. I'm a bit dehydrated. Let me find a good chart and show you guys what I mean. Okay, I want to find a very good consistent chart pattern that will give us a textbook approach. Okay, let's just use GBP USD, for example. Now look at this. All right, so using a Fibonacci on this particular, we already have a higher high, we have a high, we have a higher high already, we have a low, and we have a lower low. Let me show you already. For those of you who are not seeing, this is the previous low, this is the high, a new low, and the market has already made a new high. Okay, so once you see, the way to apply Fibonacci is, because I see a lot of traders do something like this when the market has, for instance, when the market is still at, let's say, this level, they go ahead and put Fibonacci here immediately. They go ahead and put a Fibonacci to something like this. Something like this, which I've already told you this is wrong already, because of the wrong this market is clearly an uptrend. We already have a possible higher high, so this is already wrong. Okay, we're looking for a way to follow the trend. We're looking for an opportunity to follow the trend, not to counter the trend. That's what Fibonacci is used for. Okay. Now, another mistake people make is now the market already has a high. Now the market already has a high. They do something like this: draw from swing high, swing low, sorry, to swing high. Now, can somebody tell me why this is wrong? Can somebody tell me why this is wrong before I mention it? If you know why this is wrong, tell me on the chat. If you know why this is wrong, why this application doing something like this is wrong, tell me why. If you can already see it, tell me why you think it is wrong on the chat. Tell me why you think it is wrong. Tell me why you think this is wrong. I can see some of your comments. Somebody is saying misuse of time frame application is a full topic. Maybe one of these days I'll talk about that. Time frame to apply Fibonacci is my problem. Yeah, that's like a lot of. I mean, I know this topic is not something to rush, but we really just have to make do with the time we have. I noticed that most times when our trainings like these live sessions exceeds 40 minutes, people that watch it later, they find it very tedious to watch. So I'm trying to like make our YouTube videos like short, so that those that probably want to watch the replays later, they can easily, grab everything and move on. Okay, so that's why we have to keep these things short. Like lately, most times, earlier we can do sometimes 1 hour 30 minutes, but it's not fair to people that come later to like rewatch the replay. Okay, so that's why we're making it this short. So somebody said time frame is a topic that is underrated. Yeah, really underrated, because it has not started retracing. Excellent. This is a very good reason. Okay, somebody said you are not if it will go, you don't know if it will go up a bit. Okay, it hasn't closed yet. Good, the retracement has not started. Exactly. So you guys are really following. I'm very happy that you guys are following. Jeremiah Ogwebi Technologies, David BME, who else? There is no pullback before. Exactly. So I'm glad you guys are following. Please, Angel FX. Okay, good to know you guys are actually following. So this is wrong because this market has actually not started retracing. We need to see this market retrace at least a little before you actually put a Fibonacci 2, because this is not a swing high yet. We don't know whether this market will still push up again. This market can still push up again. So this is very wrong. Okay, so you wait for the market to give you at least the slightest indication that the retracement has actually started. In this case, for instance, this red candle. Okay, this is not even a red candle yet. So let me remove this Fibonacci 2 until we get a very valid red candle. This is valid. You can actually start from this, use this as your swing high. Okay, but if I were you, I'll wait for at least a much more stronger indication that this is actually resistant. Okay, let's see. Good, this is valid now. Once you see this kind of thing, this is a good place to put a Fibonacci. And that mistake people do is that they draw Fibonacci from the body of the candle. Look at this. This is not right. Okay, drawing a Fibonacci from the body of the candle is not right, because you want to capture all the possible liquidity when you're putting a Fibonacci 2. So you draw this from the wicks. Okay, you draw this from the wicks, from swing low to swing high, and then watch out for the retracement. Okay, so these are all possible areas of reversal. The market can reverse from a 23.6%. It can reverse from a 38.2%. It can reverse from 50%. And if you guys can remember, there was one time on our weekly, Monday mentorship session where I taught you guys the importance of each of the levels. For instance, a market that is reversing from the 23.6% level is a very, very strong trend. It's a trend that you don't want to be messing up with doing a counter trending strategy or trading on. Okay, a market that is reversing from 38.2% is a strong trend, but not as strong as reversing from 23.6, right? A market that reversed from 61.8% has a very high potential of giving you a very good risk to reward ratio, because a market reversing for 61.8% has already gathered enough liquidity to continue moving up on, to continue wherever the trend has been going to. You understand? So each of these level that I personally use all have their significance. Okay. So that's why it's very, very important to take note. I won't go into that teaching again. I already have a teaching on that. One of our live sessions, you can scroll, go on our live session on the YouTube channel, look for that video. I can't remember the name. I really can't remember, but it has something to do with Fibonacci. Okay, go and watch that video. It really help you a lot. Okay, so you know the significance of a reversal from each of the levels. Okay, so I hope that makes sense to you guys. So in this case now, this particular market reversed from 38.2% level. Now, another thing you need to know is that once the market has broken and closed above a Fibonacci level, that Fibonacci is invalid. Take note of that. For in this case now, the market reversed from 38.2% level, and we can clearly see this candle, this blue candle right here, has broken and closed above this Fibonacci level. That means that this Fibonacci level is invalid. It has become invalid. So this is where you have to draw another Fibonacci level. Let me delete this one. Let me put this one out of the way. So this is where you have to draw another Fibonacci level starting from here, because the market has broken and closed, giving you a new level. But of course, like I already mentioned, you have to wait for this market to give you a very significant retracement. Okay, so these are our new swing low here. These are our new swing low right here. These are our new swing low. Okay, so let's go ahead. Let me see where this market goes to from here. Good. So this is a good place now to put a Fibonacci 2 after this red candle. So you can do something like this, or you can also decide to wait for a better retracement to put a Fibonacci here. So let's see where this market possibly reverses from again. Good. So as you can see, this particular case now, the market has bounced off a 61.8% level. And let's see whether the market goes up from there. Exactly. The market tours up from there. Fibonacci, it works like magic. It works as if it's like charm sometimes. Okay. Once we have a break and close above your previous Fibonacci, this one becomes invalid. This becomes our new Fibonacci swing low here. Okay. So did you guys learn anything? Did you guys learn anything from this? If you learned something from what I just explained, let me know on the chat that you got some level of value. Okay, let me know on the chat that you got some level of value. Let me know on the chat that you guys got some level of value. Let's go. If you got some value on the chat, let me know. Let me know that you got some value on the chat, guys. Let me know. 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 All right, so hope that makes sense for you guys. Hope that makes sense for you guys. Okay, so glad to know you guys got some value from all of this. Okay, value. Okay, all right. Cheers, everyone. Glad to know you guys got value from this. So going forward, just a few things I love to mention to you guys going forward. I come on here live to trade with you guys every Thursday, so don't miss this week's live trading session again this Thursday. Somebody said I was so close for you one day. All right, so I appreciate you guys. Good to know you guys are getting value as usual. So I'll be back here again on Thursday. Let's make money together, guys. On Thursday, I'll be back here. Let's make money together. Okay, so I love you guys. Keep trading. If you didn't watch my analysis for the market, it's still on this channel. Go to the live to the video session of this channel. Watch my analysis for this week, so that at least you have a have a foresight about what the market will likely do this week, so that I can make money with us as a community. Okay, so that said, catch you guys on Thursday again. Have a wonderful. I have an announcement to make on Thursday, so make sure you don't miss Thursday live session. I have a very important announcement to make on Thursday. Okay, so I appreciate you guys. Thank you all for joining. Love you guys. Have a wonderful week trading and have a wonderful day. Okay, love you guys. Goodbye. Goodbye, everyone. Bye.